Hey guys, my guest today is Jonathan Fishbeck. He's the founder and CEO of EstateSpace, a technology platform that simplifies lifestyle management service and operations to maintain real property assets to help reduce risk and protection and protect wealth succession. He was previously the founder and CEO at a design build firm whose focus was advising, designing, constructing, and operationalizing sizable estate properties for families and family offices. Jonathan, you ready to take us to the top?
Absolutely. Thank you, Nathan.
Who's thinking about this? Like an 80-year-old with 10 million in real estate assets and 3 nephews, and they don't know how to divide it amongst the nephews?
No. So our clients are going to be typically between the age of like 35 and 55. We spend a lot of our time working with CEOs, technology founders, entrepreneurs that they ended up accumulating a lot of assets very quickly, and the level of complexity started to grow very rapidly.
Interesting. Okay, so tell me how you help them. Like, what's a big mistake that a bunch of my listeners right now, maybe they made $1 million real quick. What's a mistake they might make with that million that you can help them with?
Yeah, so I think where we're helping people out is on all of the things that are non-financial. So they buy homes, they buy cars, they start to accumulate a lot of things, right? The more money that you make, the more things that you have the ability to buy. And a lot of times people start to accumulate very rapidly. And what ends up happening is that they're reacting to managing those things, right? So we help people proactively manage those things where they're saving time, they're saving money. They actually know what they have and where it is at all times. I know what bank accounts I have. I know where all my financial stuff is. I've got a team of people managing it. A lot of times with all of my physical assets, and that's where we really step in to help. You're managing your home in a reactive way. I have a water leak, so now I fix it. Whereas we're helping you proactively prevent that water leak and ultimately helping you kind of enjoy it. You should be able to come home and enjoy, not things that you should be worrying about.
Mm-hmm. Okay, interesting. What am I going to pay you on average per month to use this technology?
So if you're a single person, you're paying $45 a month. If you have a team of 200, then your per user cost is going to go down based on the number of people that you have. Whether you're a small business, I'm a 3-time founder. So I've always wanted a platform that I could buy that might cost me a couple $100s for a 5-6 person team to be able to manage my business, manage my clients, and ultimately not have to do a bunch of rework because I have a system that's intelligent enough to allow me to do all those things, capture that information in a database-driven experience to ultimately give people what they need when they want based on their role, based on their permissions.
Now, when did you launch this and where did you get the idea? Did you have it before you were doing work at the family office, or did you see problems at the family office that gave you the idea?
Yeah, so this actually came from my previous venture as working with ultra high net worth families as a general contractor. And we finished a very large project. It took us about 6 years. There was tens of thousands of pages of documents, and I knew no one would ever look at them, read them. It was very difficult to consume. And so the idea for EstateSpace came about 5 years ago when we found it impossible to transition a multi-$10 million project to the client because there was just so much information. And so what ended up happening is we realized that we were now sucked into like the facilities management role when that's not really what our company did, but obviously we adapted, we took care of the client. And so that was kind of the genesis. And then the maturation has really been moving from like the physical asset portfolio to property management, really now to communications and an end-to-end operational platform that will allow workflows, business intelligence, and again, giving all members of your estate space the right information at any given time so that we're cutting down on a lot of the administrative inefficiencies that go on, especially in private residences.
Okay, so 2016 was when you launched the company?
2017.
2017. Okay, and now how many customers are you serving today?
Yeah, so we have over 50 families. We have multiple billionaires on the platform. We just started scaling a couple of months ago, so it's been a really exciting year. So we've exceeded our sales numbers from last year and the first month of this year, and we're really taking off. We've over the last, from the year of the idea, we had our first release in 19. Our 2.0 release was in 2020. And then 3.0 is coming out middle of October of 2021. And that's what we're really excited for because we'll have end-to-end capabilities. Again, we've got workflows. We have a marketplace for service providers to help our clients on things that we don't do, as well as business intelligence. So those are kind of the 3 things when you think about EstateSpace. And now we'll have web, both mobile, Android, Apple. So we'll be able to be anywhere that our clients need us to be.
Let's talk more about that in a second. But first, take me back to that beautiful sort of year one, 2019, to get that release out. Do you remember revenue that year, total revenue?
Yeah, that total revenue that year was probably about $150,000.
What was going through your head, the year-end closeout? Were you exciting or were you bummed or what?
No, I think we were psyched, right? So we that was kind of like our proof of concept launch. So we kind of saw that as like our beta launch. We got 13 clients, and they were spread across ultra high net worth families, family offices, and then supporting service providers. So property management company. We also had an estate management company, and so we got all of the flavors that we were looking for, and then we were able to get a ton of feedback. And that led to our 2.0 release, which was, so we were launched September of 19. Second one came in June of 2020. And now this October is 3.0. That's probably what I'm most excited about. Again, we try to listen really well and then apply that feedback in a way that benefits all of our customers.
So 150 grand in 2019. What did you scale up to in 2020?
So we did $1 million in 2020, and we did 1.4 in January of this year. And we continue to scale that number up this year.
And is that 1.4 cash collected? Like you pulled a bunch of annual payments in that first month?
No, so that was just a contracts won, and then that was aggregated over a 12-month period.
I see. So like, I guess the way to ask this would be like last month, what was your monthly recurring revenue, would you say?
About 175,000.
Wow. Okay. Got it. So got it. So you're I guess you just broke essentially $2 million run rate. So, what do you think you'll finish the year at?
So I'm hoping to throw about another 750 to 1.1 on top of it. That's what I'm projecting.
Where's the growth coming from? Is it more seats across the same 50 customers, or adding brand new families altogether?
Yeah, no, it's adding. It's now that we have our web application coming out, we're able to start onboarding businesses. So we're able to. So a lot of our families are going to be anywhere from about 5 to 10 users, Nathan. But businesses can be anywhere from like 50 to a couple thousand, because EstateSpace is built for everyone in your ecosystem. So if you think about a business, right, you might have employees, you have vendors, you have suppliers, you have clients. All of those people are members of your EstateSpace. And
yeah. Nathan, sorry, I want to make sure my audience doesn't miss this. You're really playing in like the physical asset management space. For example, if you are a CEO and you buy 30 Macs for 30 team members, I could manage those Macs on your platform. Is that accurate?
It is.
Yeah. So it's not just like you own a mansion and you need to do like tax planning.
Right.
You're really, again, if this is an asset class that's growing very quick, there are a lot of SaaS companies in this space growing quickly. You're in this space.
Yes.
Interesting. Okay. How are you finding customers?
It's kind of threefold. So we're campaigning for very specific people. So we're finding people like through LinkedIn. We have an extensive network. So part of the beauty about EstateSpace is myself, my partner, we were able to roll up about 18 years of human capital into this company. So our whole network was really applicable. And then we have a team that's out doing outreach. We have a digital inbound funnel as well. So we're advertising, we're marketing, but we're targeting the people that we feel that we can really have the biggest impact on. And so that's the high net worth individuals, executive, family offices, and then the supporting service providers. And when I say that, we're focusing on more of a luxury market as our go-to market. So like a luxury contract management company or a consultant that's helping with something to do with more on the estate management or property management side. Those are kind of the main targets that we're going after from a B2B perspective.
Last month, how much did you spend on just paid ads?
Probably about $3,000. So not.
And how many? That's not a ton. Yeah. How many new customers did you add last month?
One from those advertisements. Yep.
Okay. Interesting. So is that sort of the right CAC? You're willing to spend about $3,000 to get a new customer?
No. So right now, because we're sunsetting 2.0 and releasing 3.0, we're starting to pivot our marketing and our messaging. Our website will be turning over next month. So we have, I'd say, a handful of referrals that are coming on to for the 2.0 release, which was mobile centric, mobile first, with a very simple web supporting application. And so not to confuse our upcoming buyers and a lot of the people that are in our pipeline, we're going to be pivoting all of that. So I'm kind of okay with that. But typically on average, about $3,000 to $5,000 is going to get us like 3 to 5 million eyeballs. And then from there, we're looking at about 500 leads that probably end up somewhere around 150 of sales qualified leads that typically, from there, we start working down about, anywhere from like 20 to 50% by the time that you get down to it. So that 5,000 should really lead to about 10 customers in a month.
I see. Now, have you bootstrapped all this or did you guys raise?
Family owned and operated, built in the United States.
I love that. So do you own 100%?
So myself, then my family, and then I'd say we have 8 stakeholders, but myself and my family, we own 88% of the company in year 5.
That's very cool. Now, any plans to raise, or do you want to stay bootstrapped?
So we were going to have plans to raise, but we ended up really getting the right clients and the right people in the company, and then we're scaling now. So there's no, I've taken that off the table, given how exhausting it was to raise some of the money just internally right now. So no plans of like a formal Series A at this point.
What do you mean by that? Raising money internally?
Just mean working with myself and my direct family to, figure out what capital we wanted to allocate to this venture, right? So that ended up, it's just all very time consuming. I was looking to raise with family and friends. I'd say I think we raised somewhere around $1 million, and then we've also had a great. We had a client that came on that's also.
What year was that? Sorry, when you raised $1 million?
Well, that was 2019.
Okay, so you did sort of raise, but it was all family and friends.
Yeah, well, it was like three family and friends, and then we've to date we've invested just over $7 million across the company, and that's about $1 million of that was not my direct family.
I see. What would you value the company at today?
So we keep it really simple. So we're just 10x ARR. So by the end of this year, my goal is to get us somewhere to that 20 million mark, and that's a kind of a middle of the line conservative SaaS model because we are pure SaaS.
Yep. I mean, I personally would argue you're worth more than that. If you're already at $175,000 per month in revenue, right? So that's about a $2.2 million run rate. I'd say like minimum 60s. Although all you investors listening aren't going to like that I'm building Jonathan up like this, but I would say at least 66, 70 million.
Yeah. I mean, I like you, right?
You can pay me the commission after the call. All right. No, just kidding, Jonathan. What's the team size today? How many folks?
So we just scaled the company. So we were at 6 about 6 months ago, and now we're at 13 going to 15. That's mainly consists, first we tripled our development team. And then from there,
how many developers?
We have 8 total developers. And now we're starting to add salespeople. And then from there, we'll backfill customer success. And that'll be a great problem to have.
How many quota carrying sales reps do you have?
3.
And what's the quota?
So they're just coming on right now as we're scaling. So they just are actually, that team's growing Monday of next week. So, but their quota is to come out of the gate is going to be to get acclimated. And then as the 3.0 hits, we'll expect to see, anywhere from 5 to 10 sales per person per month.
Got it. What does that mean in terms of new ARR in the first 12 months you want them to drive?
So, I mean, if you're just going kind of on average deal flow size, I mean, each one of them should be bringing in anywhere from, 10 to 25,000 at best, I would say, to start.
Yep. So call it like a $300,000 first year quota on the high side, $25,000 a month, right? In new MRR.
Yep.
Yeah.
Exactly.
Interesting. That's always the hardest part is when you're making those first 3 hires, like what quota do you give them, but also give them time to ramp up. You don't want to overwhelm them on day one and then they get demotivated.
Yeah, so it's kind of one of those things where we're just super transparent, Nathan, right? So we just tell them kind of where they are. They know they're coming in on the ground level. Gave them the opportunity to sell what we have now, but that's kind of maybe counterproductive to their long-term goals. So they're coming all in on 3.0's release, and that's really great, right? Because ultimately they're going to know the company, they're going to know the client, they're going to know the product, and they're going to be able to make sure that everyone's a great fit. Now, one of the great things about where we're going with 3.0, everything's user driven. Everything's, we've integrated Stripe right into the platform. We're, in the process of getting, SOC compliance and really taking our company to the next level. And all of that for our clients means easy buying. So you're able to just click to sign up, pay, click to sign in and go. And then, from there, it's software as a service. And we're supporting all your technology needs, but we built an affiliate partner program to help someone that has any size house do all of the digital cataloging, right? We have partners to help you with advice. Being in the space as a consultant and an owner rep for about a decade now, the hardest thing for most of our families, most of our clients, is getting good advice at the right time and finding really great people to help them. And so, we try to not only unblock the road from an intuitive technology platform perspective, but also surround them with a marketplace of service providers that can help them accelerate and maximize the things that EstateSpace can do for their family.
Yeah. Now, you mentioned obviously you're bootstrapping this, right? You put 7 million in yourself and then 1 million from sort of outsiders. But are you guys profitable today or burning capital?
We're still burning a little bit. Our profitability is we're probably about, well, not probably, we're 350K of recurring away from break even.
Of annual recurring.
Yep.
Yeah. So like that basically means $175,000 a month last year in revenue. You spent like maybe a total of 220 grand or something on all expenses.
Yeah. So our expenses are less than what we're bringing in, but from where we're going to grow this year, I need another 350 of annual recurring to support the scale and the growth that I have coming on.
I see. But if we just look last month, right? So
last month we made more than we spent by about $15,000. Yep.
Oh, great. Okay. Yeah. That's great. So profitable last month, but again, you're about to keep reinvesting in growth, so you'll need to keep adding.
So it's not a perfect model when it comes to like profitability. So we just need to continue to keep building, keep growing, keep selling.
Yeah, no, I like that. All right, that should be the model for every SaaS founder, Jonathan. Let's wrap up here with the famous 5. Number 1, what's your favorite book?
I'd say my favorite book of all time is going to have to be The E-Myth Revisited.
Number 2, is there a CEO you're following or studying?
Absolutely. So, I follow, I like Bezos. I like Amazon. I like to follow Apple. I like to follow Netflix. I'm a huge fan of those 3 for a number of different reasons. I'd say those are probably the top 3 that I follow.
Number 3, what's your favorite online tool for building EstateSpace?
I would say my favorite online tool for building EstateSpace.
Besides your own.
Okay. I would probably have to say I would put Envision up there from a design to development perspective. It does a lot. So I'd say Envision.
Number 4 here. How many hours of sleep do you get every night?
7.
7. That's pretty good. And what's your situation? Married, single, kids?
I'm happily married to my wife Vanessa. I have 3 kids: a daughter 15, a son who's 4, and another son who's 2. I've got two beautiful dogs and 5 birds. So
that's amazing. How old are you, Jonathan? Sorry,
I just turned 39 June 3rd.
Wow. Okay. Last question here. What's something you wish you knew when you were 20?
I wish I would have told myself to get good advice before I started a company. So. And not just good advice, right? I got that. I think it was getting good advice from somebody that was in the space that I was going into. So I was actually just asked a question of like, if I had $1,000, what would I spend it on? And I've watched that same question get asked, but my answer was simple. I would pay for really, really good advice because it's intrinsic, right? It's going to carry on value with me forever. So that's what I wish I knew. And that's kind of what I as I mentor and help other young CEOs and entrepreneurs, it's, get good advice from somebody that's been in the space that you want to go into, that's already done it. Because, the mistakes early are the ones that cost the most.
Guys, EstateSpace.com. If you're buying 50 Macs for your team, they'll help you track all those Macs real time. Call it in physical asset management, right? $150,000 a year in revenue back in 2019, grew to $1 million last year. And this year, they're already at a $2.2 million run rate. They've done all this bootstrapped using their own internal capital. They have over 50 customers that pay on average $3,500 per year for the platform. They were profitable last month, $15,000 as they look to continue to scale with their team of 13 today, 8 engineers, and their first 3 sales reps coming on board with a $300,000 quota. We'll see what happens next. Jonathan, thanks for taking us to the top.
Awesome. Nathan, appreciate your time.
One more thing before you go. We have a brand new show every Thursday at 1 p.m. Central. It's called Shark Tank for SaaS. We call it Deal or Bust. One founder comes on, 3 hungry buyers, they try and do a deal live, and the founder shares back-end dashboards, their expenses, their revenue, ARPU, CAC, LTV, you name it, they share it. And the buyers try and make a deal live. It is fun to watch every Thursday, 1 p.m. Central. Additionally, remember, these recorded founder interviews go live. We release them here on YouTube every day at 2 p.m. Central. To make sure you don't miss any of that, make sure you click the subscribe button below here on YouTube, the big red button, and then click the little bell notification to make sure you get notifications when we do go live. I wouldn't want you to miss breaking news in the SaaS world, whether it's an acquisition, presentation, a big fundraise, a big sale, a big profitability statement, or something else. I don't want you to miss it. Additionally, if you want to take this conversation deeper and further, we have by far the largest private Slack community for B2B SaaS founders. You want to get in there. We've probably talked about your tool if you're running a company or your firm if you're investing. You can go in there and quickly search and see what people are saying. Sign up for that at nathanlatka.com/Slack. In the meantime, I'm hanging out with you here on YouTube. I'll be in the comments for the next 30 minutes. Feel free to let me know what you thought about this episode. And if you enjoyed it, click the thumbs up. We get a lot of haters that are mad at how aggressive I am on these shows, but I do it so that we can all learn. We have to counter those people. We got to push them away. Click the thumbs up below to counter them and know that I appreciate your guys' support. All right, I'll be in the comments. See ya.